Sarah, does Chairman Powell have to be a little careful because everybody's waiting for any indication he's going to back off? Might the markets overreact if he says, you know what, yeah, we're going to think about a pause?
Well, I think that.
Oh my God, if he said that, if he was that clear, can you imagine?
I would be very surprised to hear something, especially given the back and forth rhetoric that's going on with the White House too, right? So, but I also think that when there was slightly more aggressive language, such as we could go over the neutral rate for some period of time because we've been under it for such a long time, that I think people then thought, oh my goodness, the Fed might get very aggressive. So I think that seems to have backed away a little bit, and I wouldn't be surprised if it seemed more measured, as in it's not necessarily going to be one or the other. If we think that inflation is really running away, we're going to have to do something. But if it doesn't seem to be, I think it's going to be more balanced, because I think that given the fact that the equity markets had such a rough November and October, I think that everybody's going to want to be careful in their language so that they don't put something out there that looks like it could have a big reaction to it. But it does seem like it's gotten a little bit less aggressive, the language.
But I also wonder, too, if Steve Mnuchin was trying to find a way out for the Fed, too. I mean, we reported that he was talked to the bond dealers and investors in October and said, what if we didn't hike? What if there was balance sheet reduction? What would that mean to you? Like, is that a viable alternative?
Yeah, so I think that the balance sheet reduction, you know, the Fed's saying, hey, we're going to continue to hike, but we're going to stop runoff of the balance sheet. I think it's much more likely that they go the opposite way, that they end hikes, they continue to run off the balance sheet. There's been some questions because of some technical issues that have been going on with the Fed funds market, that some people are suggesting that maybe there's already not enough reserves in the market so that the Fed balance sheet runoff is having a major effect. I think it's because of other reasons, so it's actually much more technical than that. So, you know, my view is that the Fed balance sheet will probably run off another $700 billion or so before they'll have to do that. But there's no way at this point that we can know where the tipping point is for the balance sheet versus the rest of the market.